This video is going to look at the use of the horizontal analysis financial tool. There are a couple different tools that we can use to analyze. The horizontal analysis, which compares a company's financial condition and performance across time, in other words, from one year to the next. Or there is vertical analysis. Vertical analysis compares a company's financial condition and performance to a base amount. This is a measurement of key relations between financial statement items. Another tool that we can use is ratio analysis. First, let's look at horizontal analysis, which is sometimes called comparative statements. This is measuring a change in a financial position across time, from one year to the next. Think of it as a horizontal straight line across. In order to apply it, we calculate a change in the dollar amount. The dollar change is going to be the current period or the analysis period amount minus the base period amount or the first amount presented. We will be measuring the amount of change between 2019 and 2020. The base amount year will always be the first year presented. So the dollar amounts for 2019 become the base period amounts. Once we have the base period amount, we divide the dollar change, or the change from the beginning of the year to the end of the year, or the change from one year to the next, and divide by the base period amount. And then multiply that by 100 to get the percent change. So applying horizontal analysis to a balance sheet for ABC Company, we are analyzing the current year, 2020. The first year presented is 2019. We are going to compare horizontally, or from one year to the next. So step one is to calculate the dollar change. We started with $23,500 in cash, ended 2020 with $12,000 in cash. Overall, there was a decrease of $11,500. Once we have the dollar amount of change, we can compute the percent change. We do that by taking the dollar amount of change and divide by the base year. The base year is the first year presented. So here we are seeing the first year presented is in 2019. So that year becomes the base year. 11,500 divided by the base year of 23,500 multiplied by 100, the percent change is 48.9%. Horizontal analysis applies this across years, across each line of the balance sheet. Accounts receivable, we had a change of $20,000. $40,000 increased to $60,000, $20,000 change. The percent change will be the change of $20,000 divided by the base year, $40,000, percent change of 50%. Inventory, dollar change was a decrease of $20,000 divided by the base year, $100,000, $20,000 divided by $100,000, we have a 20% decrease. Applying horizontal analysis line by line enables us to analyze and see where things stand out. They had a decrease in cash. That helps direct our attention to try to identify if that is a problem or if that is a good trend. 150% increase in prepaid expenses. What's happening here is this is flagging or directing management's attention or investors' attention or creditors' attention to areas where there might be some concerns financially. The same thing can be done with the income statement. We compare across years. A dollar amount of change for revenues of $40,000 divided by the base year, the first year presented, 8.3% change. Line by line by line, we take the dollar amount of change between years and divide the dollar amount of change by the base year to get the percentage change. Again, this directs management's attention to areas where there might be concerns or areas where there were good results. Helps management identify where attention needs to be directed. Horizontal analysis can be done across more than 1 year as well. Trend analysis is used to reveal patterns in data over a period of time. We can do this for any number of periods, for whatever length of time management would like to analyze for good, positive, or bad, negative trends. The base year will always be the first year presented. So here, analyzing ABC over a trend of 5 years, the first year presented is 2016, which will become our base year. To calculate the percentage change from 1 year to the next, we will use the base year and divide it into the current year results. Revenues of $290 in 2017 divided by the base year of $275 multiplied by 100 gives us a 105% change in revenues from 2016 to 2017. Do the same for cost of sales. 198,000 cost of sales in 2017 divided by 190,000 in the base year. 104%. 2017's cost of sales were 104% of 2016. Expanding the analysis to the next year, revenues of 320,000 divided by the base year of 275. Percentage change in 2018 over 2016 was 116%. Cost of sales, 225,000 divided by the base year of 190. Percentage change of 118%. Again, we are calculating a percent change by taking the current year, dividing by the base year amount. Another way of identifying positive or negative trends for a corporation.